You will be completely surprised when new property investors go out there and they don't consider every single cost to a buy-to-let investment. And you need to consider all these costs, not just actually getting your first buy-to-let, but also the ongoing costs that you're likely to experience, and also mitigating the risks to ensure that you can continue your portfolio and you don't get any setbacks. In this video, I'm going to cover every single cost I can think of when it comes to getting into your buy-to-lets, whether you're new to buy-to-lets or you want to continue with your buy-to-lets and you want to work out how can I make sure that I've got all the money that I need and I'm not over-leveraged. Hello everybody, Jason Davis at Lighthouse Investments Group, and I'm going to get straight to it in this video. I'm going to cover every single cost that I can think about. I've written some of them down because I want to make sure I get every single cost. But I'll be really interested in the comments if you can think of any others, because I know some of you out there already have a property portfolio and you know, maybe you go into this channel to get educated more and you want to grow that. So the first one, the classic one, and I'll leave the best till last, but the first one, obvious one, is your deposit. Now typically you're going to need, and this is what you should really assume when you're going for your buy-to-let, especially if you're new to property investment, and that is have 25% deposit. So if it's a 100k property, 100k purchase price, you're going to have £25,000 as a deposit, with 75,000 loan to value. Now there are potentially 80% loan to values, and there's going to be potentially more of those options, but you should assume that you need at least put 25% down as a deposit. So once you have your deposit together, the next one is going to be your stamp duty. And no one in property really likes stamp duty, but it is a requirement. And remember, even if you're going for low price properties, you're going to have as a minimum surcharge of 3% stamp duty. And of course, if you're going for higher property prices, then that will change depending on the stamp duty calculator. The next one is going to be your legal fees. Now, remember with legal fees, you're going to have the fee that's associated with the solicitors that are required for the purchase of the property, but you're also going to have what they call disbursement fees. That includes indemnity checks and searches, which are going to be key to the purchase of any property through the legal process. Next one that's key is your broker fee. Now, really, don't skip this. Your broker fees are only going to be about £500, and they're really important through the whole process. And you know, they're paid by the lender at the end of the day, so make sure you include that when you're going through the buy-to-let investment. The next core one, of course, is your refurbishment. And as with any refurbishment, you know, you have a plan. Of course, you have a schedule of works, but that can completely turn on its head. And sometimes whatever you predict as a cost can double, whatever you predict as a time, it can double. So make sure, especially if it's your first refurbishment project and you've got a number of different contractors involved, make sure you have a contingency and a buffer in that, because the chances are if you think it's a 10 grand refurbishment project, it's probably going to be more like 14 or 15k. So just bear that in mind. So of course, another one is your survey charges. That's going to be absolutely key. And another one that's really important, this is before you bought the property, by the way. This is the last one I can think of in terms of before you bought the property, but of course there's costs, ongoing costs as well. And that is what they call the early redemption charges. And that's really key, especially if your property strategy, like a lot of property investors, is the process of buy, refurbish, refinance, the BRR strategy. Where you ultimately you want to purchase your own investment property, change the product in a way, and then refinance it, and then of course make money out of your investment. But you can get stung if you're not careful, because there can be an early redemption penalty within the mortgage of up to £2,000 within 2 years, let's say. So you've got to look out for that, and that's where a mortgage broker can really advise you on that, and you can potentially find a way to pay more higher interest rate for a short period, as opposed to hitting that redemption charge. So think about that if that is particularly your strategy, and for a lot of property investors, that will be the case. Now let's move on to, once you've bought the property, what are some of the costs you need to take into account? And some of the property investors that I know just don't take into account some of these costs. The first one, really important, is insurances. Once you have a buy-to-let investment, you let out that property, you need to have a number of insurances. I'm not going to go through each one, but we can cover that in the comments. But you need to make sure that you're insured as a landlord, as an investor. The second one is voids. This is one of the biggest, and people just don't take into account. It's not even the probability of it becoming, tenants leaving and causing trouble, and you're having void periods throughout the period in which you've got the property as an investment. It's also the initial period while it's refurbishing. You really should put aside at least 6 months when you get everything going through, at least 6 months where you're going to have, basically, you're going to have to account for paying for all the void period until a tenant gets in and starts paying your rent. So what are we including here? Well, we're talking about utilities, gas, water, electricity. You're going to have to be paying for that. We're going to be talking about council tax. We're going to be talking about the fact that you're going to have no money coming in. You still need to cover for the mortgage rates, etc. Also voids later on. So all of this needs to be taken into account, and really, depending on the property price, you're looking at around about 150 or to 300 per calendar month for that, for at least 6 months at the very, very beginning. Of course, any emergency costs that you're going to need to factor in as well. The next one is really need to consider the unforeseen situations, the emergency costs, and you know they're going to happen. If you don't consider them, then really you're going to have maybe a bit of a shock one day, because it's hard to account for everything. But there's some obvious things, leakages, damages, cracks, mould, damp, all of these types of things, and you need to cover a potential buffer amount for any unforeseen emergency costs. And finally, you've got the exit fee. There's only 2 ways to exit when you have a property investment. There's refinance, and then there's selling the property that you have. And there's fees associated with that. So the first one is refinance. Obviously, to refinance, you're going to need, again, legal support, and you're going to need a broker. So again, more fees, at least 1,500 is a minimum I put aside for that. And then there's the sale of the property. You're going to need to account for estate agents and any estate agent fees. You're going to have to account for void periods then as well, because I'm assuming you're going to be selling a vacant property. Again, you're going to account for legal fees, etc., etc. So you need to consider the purchase, the utilisation, during which you have the investment, and of course the exit and your exit strategy. And all of those costs need to be considered when you are looking at your portfolio, and also the net returns that you're getting. The biggest cost I leave to last is time. Time is huge, and a lot of property investors, especially at the beginning, don't realise the amount of time that is required to make sure they get this right. And if they don't put that time in, often they end up with an investment which they don't love. As I said, the difference between an investor and a landlord is massive, and you become a tired landlord, and you quit it altogether. You just don't grow, it's not working for you. So the biggest one is time, and as I said, and that could be finding the right property, the right location, refurbishing, refinancing, all of those things like that. So that's where we are, here to help people to get into property investment, or if you're already in it, to grow that portfolio. And we specialise in the north at Liverpool. So if you're interested in having a consultation call with us to discuss your strategy and potentially buying your first buy-to-let, and we go through the whole strategy in terms of how that works and what we can do for you, then type out LHG in the comments, and we can have that free consultation call and go through that with our team. It's been great speaking to you. I hope this has been really useful. As I said, we have this channel as an education channel, really, to help people get into property investors. We want to help the busy professionals, people that have got money in the bank, they're working very hard, and they need to start thinking about, beyond their pension, how to really create a wealth for the future, and we can help you do that. So if you're interested in more of these videos, smash the subscribe button, and the like button and comment. Let us know your thoughts. Is there a cost there that we didn't consider? There probably will be. I try to consider everything, but there's probably some of you already maybe have been stung by other costs that are experiencing this right now. So I appreciate your thoughts. Other than that, I'll speak to you in the next video.